All right. So if you guys anyone would like to start with any basic question related to trading, uh, feel free to start.
Hey Danish, I'll start with my question.
Vijay, I guess.
Yes, Vijay here. Could
Yeah.
you explain about the futures, how it works? I find the ticker symbol ES equal to F.
Yes. So futures is a derivative product, just like uh, just like options are derivative products from based off of an underlying. Futures are based off of index, and the closest possible similarity in common language would be if I were to be able to buy the index, the closest I can get to is a future contract. Nobody can buy an index, correct? But the closest possible uh, thing to buying the real index is a futures contract. You cannot buy an index for obvious reasons, but you can buy a futures contract which expires every 3 months and pretty much runs as close to the value of index as possible. Does it answer your question?
Yeah, that answers. So is the futures and future options, is it different? So now my understanding is we can only trade the futures options, which is a contract. But we cannot trade on the futures, right? Only the future options then.
Can you please repeat that? I'm sorry.
Sure. I find there is futures and futures options. So what I understand from the contract, which is expiring every 3 months, is nothing but a futures option.
No, that's future.
That's future. Okay,
that's
then,
future.
Okay, then
and futures option. Then future option is just like regular options. It's based on off of future. So a derivative product based on another derivative product.
Another derivative. Okay, got it. Okay.
So there are index options and there are future options.
Right.
So index option is based off of index.
Mm-hmm.
Again, you don't own any underlying.
Mm-hmm.
It's, index itself is a virtual thing, right? It's not a real thing.
Right.
It's just a monitor of health of the market. So that's what it is.
Okay, got it.
Yeah.
Thanks.
ETFs are based on the same companies that are there in the index, but they are actually you can buy the share of the company. Like all those companies are equally or whatever is the weightage in the index. According to that, they're weighted, and that's how the ETFs are made. It's a bundle of companies that are representing the index. So futures, future options, index, and ETFs are related to each other loosely, but index is the base.
I guess Raj has a question. He has raised his hand.
Oh, sure, Raj.
Oh, hi there. I have a question.
Sure.
I recently started investing, so I'm pretty much very beginner at the moment. So last week I was trying to do some investment. I thought of tracking the NASDAQ top 100 index ETF, I mean the ETFs and stuff. But when I asked, everyone said ZQQ or QQQ and stuff like that. But those are already in the range of like $100, $200 per share, right?
Yes, sir.
So I thought like, okay, let's target something lesser, maybe like a new IPOs or like the stocks which started like last year or something like that. Do you think investing in that kind of stocks is better, or should I have to stick with which is already reached $200 a share?
Question for you. You're in Canada, right?
That is correct. Yeah.
Okay. So would you prefer driving a Toyota car or some new company that just came up yesterday or last year?
I prefer a bed standard car.
What?
I mean, let me put it this way, right? If you ask me, you want a Honda Accord or a Honda Civic, I say depends on the money because both of
No,
them
no,
are.
no. I'm not asking you that. I'm not asking you that. My question is different. My question is that there is a new company, NIO.
Mhm.
That's a NIO, NIO, right? That's a
Right.
real company, right?
Mhm.
Now, given a choice to buy a Honda or a Toyota or a NIO, which one would you prefer to buy?
Yeah, I buy the Honda Toyota for sure
Why?
because they are reliable, right?
Yes,
They already
sir. You
have.
already gave me the answer. You already have your answer.
Okay.
So
Yeah.
do not go with something which is less expensive
Mhm.
because it might end up being too expensive for you.
Okay. Um.
Know what I mean?
Yeah. You mean if it goes south, you'll be losing all the money? Is that what you're trying to say?
Yes, that'll be way more expensive for you.
Right.
So
Okay.
let me tell you what I did.
Okay.
I had a similar dilemma about 5 years back.
Mm-hmm.
I had $35,000 in my
Right.
bank account,
Mm-hmm.
and I was very happy that I was able to get an invitation for Robinhood, and I finally, transferred $35,000 into Robinhood. Now,
Okay.
at around that time, Amazon was around $1,100 range.
Mm-hmm.
I contemplated if I should go into Amazon or not. And if I would have gone into Amazon, I would barely have purchased like 32 stocks on Amazon,
Right.
30, somewhere
Yeah.
around that. So I was contemplating if I should buy Amazon or not, because what can I do with 30 stocks? It's not even a big number. That's what I was thinking. So I invested that into a company which was at that time $8 or $10, somewhere around that time range. And the expectation was because somebody had told me it would go up to $16.
Right.
And well, I thought, well, 16, my 35,000 will become 70,000. And guess what? It was a pump and dump. Within a few days, it went to 6. And from 6, it went to 4. And it took me a year and a half to finally cut the cord, waiting and waiting forever. One fine day, I just said, to hell with it. And I just booked my losses. So I lost $21,000 because of that kind of immature behavior of mine. So sometimes the less expensive becomes extremely expensive. I hope I answered your question.
Yes, you did. So it is pretty much focusing on the long run. So if you invest big money,
No, I'm not saying long run. Long run is long as a few weeks is long enough for me,
right?
but at least something which is time tested.
Okay.
As
All right.
as you just said, you will prefer anything like Toyota or Honda.
Right. So one more question, if you don't mind.
Sure.
So I was evaluating this particular ETF, so I just want to get an opinion from you.
Which one?
ZQQ? Not listen. Just give me one
PQQ.
second. ZNQ, please.
Zen?
ZNQ.
ZNQ.
Q. Yeah.
Oh, this one.
Yeah,
The
that's
top.
correct. Yeah.
Yeah, that's good. this is good, but here is what. I live in Australia, you live in Canada. We both want a pie of America. What happens is all of these countries have something similar to what America has. Like ZNQ is $48,
Right.
and here is QQQ, which is $271. The chart looks pretty much the same,
Right.
right?
Mhm.
ZNQ, and see, it's very much, exactly the same, rather, I would say, except for the price. But the thing is, these ETFs in countries which are outside the United States, they're not as liquid. You may not have that kind of liquidity that QQQ itself has. So when you go to buy ZNQ, or like, okay, you're talking about ZNQ in Australia, they have NDQ.
Okay.
Same thing. See? Same thing, similar chart, right?
Right. So everything
But
goes down much and then sort of go higher and higher after that.
yeah, but you do not get that kind of liquidity in these kind of ETFs compared to triple Q itself.
Right.
Got it?
Yeah.
So nothing against them, just that they're not as liquid.
Okay.
Danish.
Yeah. But when you said liquid, you're talking about the cash flow or?
No, how easily you can buy or sell them, man.
Okay, cool.
Yeah.
Thank you.
Sure. Who was that? Somebody was saying something?
Hey, Danish, Sohit this side. Hey, thanks for setting this up. So, yeah, probably my question is the same thing as was being asked. Liquidity means what? Because, and you said, how easy it is to sell and buy. But can you give me an example of what's difficult to buy or sell? I mean,
yeah, I would give you an example. Hold on. Let me log into my brokerage account, and I'll show you exactly what I mean. It's just loading up. Bear with me.
Okay.
In the meantime, if someone has to ask me any question.
Yeah, it's Raj again. Sorry, I have a follow up on that one. It says like Nasdaq 100 index ETFs, right? That means they will be tracking only the top 100 Nasdaq stock, or?
Yes, sir.
Okay, but
okay. Can you see the screen now?
Yeah.
Okay. Follow my cursor. I am typing QQQ. All right. Now that's an ETF. That's QQQ. And let me show you something. Can you read the pop-up that just appeared?
Yeah.
And I'm just giving you a simplest possible explanation, okay?
Sure.
How many shares are there to short? Available.
Right. 969K. Yeah.
Yeah, almost 1 million shares are available to short this QQQ, okay? With my broker alone. Okay?
right.
Okay.
Now, if I say, what was your ticker symbol?
ZNQ.
ZNQ. Hold on. Do you see? There is nothing called a shortable. I can buy this, but it is not liquid enough. Or I can show you NDQ. That's the Australian flavor of what you are saying. NASDAQ 100, see? They don't have that much liquidity.
Right.
Yeah, it makes sense. Yeah.
Or else I can show you ETF replicator. Okay, hold on. You said ZNQ. Okay, this does not even support it. So the whole point is these ETFs are not easily available in market. I mean, so consider, so simplest. How do you define liquidity? So let's say you have $2 million in your stock portfolio versus you have $2 million in your property. What happens when you want to withdraw $50,000? Your stock portfolio is just one click away, whereas you cannot liquidate one room of your property to say I want $50,000.
Right.
Correct?
Yeah. Yeah.
Yeah.
Yeah.
So you don't want to get stuck in an instrument which you are not able to. So one more liquid example is when I was in US, Toyota Camry was and Honda Accord were the two most liquid cars. You want to sell them any day, you will find a buyer. Correct?
Right.
Whereas you want to sell a Lamborghini, yeah, good luck with that. Trying to find a buyer. Okay.
Sure. Yeah.
Any other question?
Danish, this is Farhan.
Yeah.
Sorry if I'm jumping on
No,
the
it
bus.
is.
Basically, what I'm saying is that what I understand is that your suggestion is to buy those ETFs which have more liquidity than
Yes.
the illiquid ones.
Yes.
And when we say liquidity, so say for example, for people like which are new like me, if we want to see that liquidity, so we need to look at the volumes to get the idea of that
No, there
liquidity.
is a thing called ETF Tier Sheet.
ETF Tier Sheet.
I'll just show you ETF Tier Sheet. Just Google it.
Mm-hmm.
And you can, you can look into all the possible details of any ETF.
Mm-hmm.
So I use my interactive brokers tool to do that.
Okay.
Uh,
I'm also using the interactive brokers, so they have these tier sheets as part of their accounts.
Platform, yeah.
Okay.
If tier sheets will give you all the possible details, and then you can compare, because they will list like 5 parameters or 10 parameters of one ETF. Then you can compare it with the other one.
Okay.
Just said NQ. Now this is a ETF tier sheet. See, ZNQ.
Mm-hmm.
Now this is $56 million. Okay.
Yeah.
A simple number. Let's say this is January 10, 2020, and then at the same time you say QQQ.
This is almost 10 years in the market.
Yeah. Total value here. What's the total value here? Total value of NQQ. Oh, sorry, triple Q. So when some of these platforms, they give same information, same format. So that's easier to see apples to apples.
Is it not the weighted market cap, or is it something different?
See here it says weighted market cap, and here it is on this one it's showing total value. So let's see if they have a weighted market cap here. You cannot compare apples to oranges, right?
Correct.
They don't have it here.
What are you doing?
Danish, you could check that in Yahoo.
Where?
Yahoo.
Yahoo. Oh yeah, good. You are a gem whenever you join my call. It should show on profile. Total net assets here. And holdings. I don't know. Again, I am a little bit ignorant here because I do not invest in stocks or ETFs.
You want to do the net assets, right?
Yeah, where are the total net assets here?
Yeah.
Go into the summary tab.
Summary. Okay.
And the first line on the second column.
Net assets. Okay. 115.23 billion. Wow. So again, I do have blind spots when I'm driving. And Z and Q. Okay, 82 million versus 115 billion. Yeah, there you go. Apples to apples.
Hey, Danish.
Yeah.
This is Ramesh here. My question would be pretty simple layman terms. I kind of exposed myself in ETF, buying a pro share ETF, and all of a sudden they kind of close the ETF. How do I kind of avoid picking up those wrong ETF?
Go with the big boys. Go with like triple Qs and SPYs and IWMs. I don't know which particular index were you tracking with that ETF, or was there any specific index that you were tracking with that ETF?
It was something called TVIX, like a.
Oh, VIX. Oh yeah.
Yeah.
Of course they will close that. That's come on. You were tracking VIX. You were tracking fear. Nobody's scared as of now. Is anybody scared now?
Yeah.
No one's scared.
Going different direction.
So TVIX is an inverse ETF. When the market goes up, TVIX goes to zero. They might reverse split it. They might, it might go to almost zero. But if you have it at almost zero price, like SQQQ, it's at $5 today.
So when market goes down, this will go up.
When market goes down, you are a millionaire. Load up the truck at $5 if you'd like,
I was kind of anticipating that market would go down sometime, so I thought of like.
No. We can debate all day long, but I don't see it coming down anytime soon.
Ramesh, that's how the market works. We have emotions and beliefs, but the market doesn't know who we are, right?
So Ramesh, So Ramesh, let me tell you, and everybody here who is joining for the first time, here is what I see. Again, I do not follow news. I just follow the charts. And this chart is telling me that the businesses are closing down. They're getting hit negatively because it was unprecedented that 7 billion people shut their doors, sat indoors, things like that, okay? And one fine day, some other companies which were scrambling when these companies were closing their doors, they figured out a way to make money at this point here. Medical supplies, research, logistics, home delivery, you name it, they have it. So that's when these companies just started making their buck. And remember, this is an index. Index is not a family car. Index is a public transport vehicle. Nobody owns it. Only the people who can afford to buy a ticket can sit in that vehicle. Correct?
Right.
So if these guys are unable to afford the ticket, they are being thrown out of the train or bus. And the new companies which are able to afford this ticket are coming in at full speed. And that's what is happening here. Because every candle is an actual transaction happening somewhere in the world. Does that answer your question?
Perfectly.
So Danish, Farhan here again. So basically what you're suggesting is that if somebody wants to go into ETFs, they should go and look for the good ETFs which have like
the biggest possible ETF.
The biggest possible. And I think that the biggest possible are, I think, SPY and QQQ.
SPY
and
is the biggest in the world. Just so
yeah.
you know.
That's on top of my head. If there are any other that anybody knows, please do share the name. So
I think it compares to 274 billion.
That's correct. So these are the safe bets, you can say.
These are like almost like government bonds. Raj had raised his hand.
I mean, just a question here. You said go with the big guys, right? So
yeah.
Other than that, what are the things we have to look into if you want to buy an ETF? What are the other criteria? Is there any specific criteria we can check?
See, I already proved myself that I'm ignorant when I was trying to look up for the data tier sheet, right?
Right.
And Homa helped me out here. So that's no brainer. But in
your experience, you don't have to go and show me the charts and stuff, but in the layman's terms, let's say.
I'm telling you in the layman's terms, something very weird. Where would I put my money? And that's where I did. That's what I did. I put my money in this one. This is SPX index. I put my money, all my money. I do not touch any other thing. I do not trade any other instrument. My personal investment is just here.
Okay.
Something that has survived 150 years.
Which ETF is this?
This is not an ETF. This is an index. S&P 500 index. S&P 500 index. The first possible traded date here is 27th of February 1871. 150 years old. I don't think anything can beat this.
Danish, I might be naive here, but my kind of understanding is, given the current, because I'm right now in US, I'm following all the Trump saga. With the things going on, I feel somewhere the market is somewhere kind of holding it up. So it might crumble anytime. So that's one of the reasons I was looking for the inverse ETF, just to pile up some bit of things. So if it goes down, I make my money somewhere else.
Ramesh, right?
Yeah, that's right.
Yeah. Okay. I know what you're saying, and to some extent, I do say yeah, but here is my simple explanation. I'm here to make money. Okay. I don't care about what is the reason of making money. My thing is just make money. But look at this thing. And I'm zooming in here on these days. You remember these days? I don't think your father would have ever seen this kind of days. You know what I'm showing, right?
They closed the business, I mean the market on those days?
No, sir, this is circuit breaker day. The market fell so hard, so soon that they had SEC's circuit breaker rule came into play here. Never ever in the last 100 years or so has it happened multiple times within a day. They opened it up, it tried to breathe, and then it crashed again. Do you remember those days? Not too long ago. 16th of March, 18th of March, 17th of March, here, 9th of March. So my take on this is that this whole game is rigged to go up. There are no circuit breakers when the market shoots up. Example here. Why weren't there any circuit breakers when it was shooting up? Right? There have been no circuit breakers on the way back up, right? So the whole game is, all I care about is how to make money. And if the game is rigged to win, come on, I'll be on the winning side. I will watch. I'm not saying it will not come down. I'm saying I will watch it like a hawk. But for as long as I can make money when the sun is shining, well, I'll make hay as much as I can. Yeah, Ramesh.
Just my understanding, because when you say there is no circuit breaker when the market goes up, recently I bought some of the Clorex. When it kind of shooted up, there was a couple of circuit break, and again it bounced back.
On stocks. This is
okay.
The whole index.
Gotcha, understand.
The whole market. This circuit breaker was on the whole market. They actually closed down futures.
Wow.
Okay.
Yeah. So this index that you have invested in, is it the GSPC?
No, this is S&P 500 index. It says right here, man.
No, but how do you invest in a S&P 500? Is it like another ETF, or is it like
futures?
How futures?
Yeah.
So in futures also we just buy like a stock and sell like a stock?
Yeah. But futures are very, very expensive because the margin requirements differ from broker to broker. So exchange itself requires $12,500. ES mini margin. So the exchange itself requires a margin requirement of, I guess, $12,000. It was just showing now. I don't know. Yeah. Says right here. Yes. No, this is not correct. This is intra. The margin requirement is usually $12,000 by exchange, but like Interactive Broker expects you to have $26,000 for one contract. Margin requirement. I'll show you margin requirement. Quantity 1 by. Let's see this here. Let me share the screen. It will be a little small size, but you can see maintenance margin. Now this one is showing $300,000, but this is a paper trading account. No, it's right here. Initial margin $13,000, maintenance margin $12,000. So a total of $25,000 right here. Margin requirement $25,000 per contract. I guess someone was raising a hand. Farhan, you were trying to ask something?
Yeah, so like people like us who are new to this one, I think it needs a little bit of understanding how the futures work, right?
Yes, it does. I mean, that's a very long, lengthy topic. You can, you should read investopedia.com if you are interested.
Mm-hmm.
I personally always refer to investopedia.com, even if it takes me 5 days to understand one page.
Right.
It's pretty tough, but I try to stick to that. Nowhere else.
Right.
But in the meantime, So in the meantime, I do have some of part of my portfolio for covered call strategies that I do. Mm-hmm. Again, I'm long on my ETFs, so I try to collect the rent without trying to get hit. So that's a different game altogether. So it's the market is so diverse and so you have so many opportunities of making money. There is no way if you know your game, you can die poor. Simply put, right?
Yeah, so more like on the diversification side, so different strategies.
Yeah, I diversified on strategy, not on instrument.
Mm-hmm.
I mean, this is diversified enough. Like S&P itself is 505 companies, man. That's enough diversification.
That's true.
Yeah, somebody who's this? Atif.
Yeah, hi Danish. Yeah. So when you say diversify on strategies, what do you mean, Danish, by in layman terms, actually?
So one strategy is you buy stock, you sell stock. That's one way of making money, right?
Yes.
Second one is you.
That's for beginners, basically, right? That's what.
That's for beginners. Beginners. You buy stocks, you sell stock. The second one is you buy options, you sell options. Third thing is you try to have the best of both the worlds. You buy stocks and you sell options. That's what is called as covered call strategy. You try to tap out the money from both of these instruments, like both of these instruments, I would say. So you're taking best of both the worlds. So this is like there are more than one way of making money. There is more than one way of, just like there is more than one way of making food. You can make food on gas, electricity, induction, microwave, a regular oven, or you can go to campfire and still make the same food. By the way, food addict, so maybe that's why my examples are mostly food related.
Danish, can I interrupt?
Yes, ma'am.
I understand most of the attendees of your team are more like basic level. Is that true, or?
This particular call is specifically for answering basic Q&A, you know.
Okay.
Yeah.
So,
Yeah.
I mean, if I would suggest, and I mean, I know it's your call, I'm just throwing in some ideas.
Sure, ideas are welcome, man.
Yeah. I would suggest all of them to really stick to a few indexes. If you're starting, don't try to be, don't try different strategies, don't try something. It's initially what I would suggest is buy 1 or 2 indexes and watch their movement. You do that for 2 months, you will learn so much more than just, I think that would help you more, because I understand somebody was saying that I'm doing TVIX, and I don't think he even understands that's a leveraged ETF. It can hurt you far more than you can think.
Yeah. So bottom line is, Homa is saying she's getting commission from S&P and these guys, who's this QQQ guys, and you just buy SPY and QQQ, correct?
They can do IWM. They can do all those things.
Well, that's smaller. IWM is small.
Like, but I don't know how the people, somebody who just have 10,000 might be more comfortable doing IWM.
Sure. Okay. So you have three agencies with you now, right?
So sorry.
You have 3. You are selling 3 products: SPY, QQQ, IWM.
I'm selling 4.
What's the fourth one?
Well. Why not Dow Jones?
Yeah, Dow Jones. Yes, Dow Jones. Yeah, go ahead, do that. If you put your money, let's say 25% each in these 4, you have pretty much covered almost 3,000 companies, if I'm not wrong, Homa?
Yeah, 2,000 companies. Of that, 5,000. Yeah, about a good around 3,000 companies.
Yeah, that's diversified enough, right?
Mm-hmm.
Nobody in your family can ever think about doing that. The whole family comes together, they will still not be able to do that.
You're right.
And these are the most liquid indexes. So
yes, ma'am. That's the whole point. Liquidity.
And I'm not saying not to buy anything else. The thing is, if you are really at the basic level, just try to watch them. When I started, I actually started buying just 2 or 3 stocks of all these indexes, and they gave me far more understanding of the market than
market dynamics.
Yeah, because it made me I was not afraid to lose, because when you're buying just like 2 or 5 or 10 stocks, right? You know what money you have put in. But it gave me that habit of looking into that candlestick every single day. And that helped me start understanding the charts, basically.
So Atif, Farhan.
I'm sorry.
Yeah.
I don't want to hijack anything.
No,
but
I think
that's
that's a good idea to first watch and learn, and then
put them in your watch list.
And especially like some of you guys were mentioning that the market is they're not too sure what will happen with the elections and those type of things. If you're not familiar with the market, it can hurt you like anything. So mostly when I tell people, I mean, I do more the UFA type of things, and I'm on that side. Somebody asks me, I said, just start, if you're doing options, start with 1 contract. You don't have to buy 500 contracts the same day.
Never do that, ever. You might get yourself killed.
So just buy 1 contract, understand your...
Don't even talk about options here when people are not sure about it.
But even if you're trying to do, like, if you want to, let's assume you want to buy Netflix. You want to buy Netflix, start with one stock, right? Just buy one $500 stock. That's all. It falls, you average it out. Try to play it with a couple of 2 or 3 stocks. You will just understand every stock actually has a pattern. People don't understand that, but every stock follows a pattern. Buying one stock will help you find that pattern.
Cool. But also at the same time, I must warn you. There was a friend of mine who took this kind of advice from someone, and Huma, he took it too personally, and he had 62 stocks which he was trying to track. I was like, are you crazy?
No.
That's
I mean,
like,
I understand that that's a different thing. But what I was trying to just mention.
Just like with a couple of them.
Yeah. I mean, ideally, if go Google it, you Google it. How many stocks should you invest in? People will just tell you. If you have more than 10 to 15 stocks in your portfolio, you are messing up your portfolio.
Yes, ma'am. If you cannot remember your stocks in your portfolio off the top of your head, you're doing something wrong.
And I think for most cases, like, for the starting beginners, especially right now, we had last 3 weeks were earning seasons, right? If you had bought certain stocks thinking that they would go up and it was an earning season, it could go down and you can, lose a lot of money. That would not happen when you are playing with ETFs. Like what Danish is mentioning. So start with ETFs. Seriously, start with ETFs. I vouch. I do.
Buy one share of SPY, one QQQ, one IWM, and I don't even know what's the ticker symbol for Dow Jones.
DIA.
Yeah. VIM?
D as in Delta.
DIA. Yeah. Diamond. Yeah. Diamond. Yeah. They call it diamonds.
You can choose one. You can choose two. You can just watch out for what's but that will help you guys understand the market far better. It's all yours, Danish. I'm sorry.
Yeah.
No, can I ask a follow-up question?
Sure.
What do we look at and how? Like, for example, okay, the Corona thing shown here is exception, but let's say you bought the thing that Huma's talking about, and how do you see the pattern? What's the I mean, is it just using this trading view, or is there some other thing to watch it to learn? So Huma's saying we'll learn a lot, but maybe what do we look at? That's my question.
I personally read the charts, and that's all I do. And the charts tell me.
That's where Danish course comes in.
No, I don't. I don't push anything. I don't upsell anything.
But this is where I'm saying, it's like Danish said, you read the charts. It's all in the charts.
It is all in the charts. You can see it coming. You can see it coming, and it's not like I have something secret. I have put it out there in various videos on my website. If you can just see. You can you can go through these videos, how to read charts. Chart reading techniques, chart navigation. Again, chart reading. So these are free resources. You can go and listen to them anytime. I show them on charts, how I show people on charts how we do it. So it's all in the charts. I live and breathe my charts every single day. Like after this call, I'm going to trade for today. So there you have it, the secret. Hiwad, is your question answered?
That's good. Yeah, I got it.
Yeah. So 3 people still have their hands raised. Is there any question you want to ask, or you just forgot to put it down?
I think I'll just change that. I think I forgot to put it down. Yeah.
So Vijay, I think you had some questions on how ETFs and index and futures work, but working is one thing, and how to monetize it is a whole different ballgame.
Right, Ganesh. I have a question. When you say you're going to trade, what is the time for trading the futures?
Futures trade 23 hours a day.
24 hours a day?
23 hours.
23 hours?
Futures trade
Okay.
23 hours a day, yeah.
What's the start and end time?
So futures trade from 6 p.m. to 5 p.m.
6
the
p.m.
next
to 5
day.
p.m. Got
Yeah.
it, yeah.
Eastern time.
Okay, got it. 6 to 5 p.m. the next day. Could you
Yeah.
show me anyone in the paper trading account you have? Possible?
Oh yeah. Yeah, sure.
Sure. That would help, yeah. Thanks.
That's what I was showing. Hold on.
Oh, you were showing the SPX, right?
Yes.
Got it, yeah.
I was showing that there is a margin requirement of $13,000. Remember? This is S&P 500 ETF. Sorry, S&P 500 futures right here. You buy one contract like here, like just one.
Got it,
You
yeah.
place the order. Simple. And you can see it on a 1-minute candle chart. It's breathing right now. It's moving right now, see? I don't know if you can see it on 1 second, but I'll show you in 5 seconds. Yeah, see? It's moving.
Okay, got it. So it's 7 days a week, 23 hours.
6 days a week, 5 days a week. 5 days a week,
okay.
23 hours a day.
Okay, starts from Sunday evening. Okay,
Starts from Sunday evening, ends on Friday evening.
Friday evening, got it. Thanks.
Sunday evening, 6 p.m. to Friday evening, 5 p.m.
5 p.m. Okay.
All right then. Everybody, thank you for joining the call. If you have any questions, you can feel free to send me a text on WhatsApp if you'd like. I can share my phone number here on the chat. All right then. Thank you.
Thanks.
Thank you very much. Thanks a lot.
Thank you. Thank you.
Yeah, you're welcome.
Thank you.